We begin with Russia. President Vladimir Putin has inaugurated a new natural gas field in eastern Siberia that will allow Russia to increase exports to China. The Kremlin hopes to augment gas sales as its European trading partners divest themselves from Russian energy.
Moscow wants to boost gas sales to China. Gas income is critical to the Kremlin to bankroll Putin's war against Ukraine. But until now, Russia has had very little infrastructure to pump gas eastwards. Now Putin has announced the development of what he said would become the largest gas field in eastern Siberia, plus the infrastructure to export the gas. The implementation of projects such as the Kovykta field, the Power of Siberia 2, the Far Eastern route will make it possible to increase gas supplies to the east to 48 billion cubic metres by 2025 and 88 billion by 2030. But that's still not even close to what the West was buying from Russia before the war. Putin claims the new gas field in the Irkutsk region has recoverable reserves of 1.8 trillion cubic metres. That would make it around the 15th biggest in the world. The head of Gazprom, Alexei Miller, says that the Kovykta field is ready for operation and would soon begin pumping gas eastwards. Russia is desperate to get the project online as quickly as possible to replenish dwindling war coffers. But the projected timeline to build the infrastructure shows that regardless of the outcome of the war, the Kremlin expects Russia will be cut off from Western markets for a long time to come.
And staying with Russia, fresh data is out showing German exports to the country have increased slightly to 1.2 billion euros in value in November. It's down over half on the same time last year, but still higher than when sanctions began in March. I spoke to Alexander Libman, professor of Russian politics at the Free University of Berlin. He points out that there's still plenty of trade not subject to sanctions.
Good example are pharmaceuticals. Pharmaceutical exports are also down, but only by about 10% as opposed to the pre-war state. It was one of the biggest export articles of Germany to the Russian Federation.
OK, and, we've seen that this amount has around halved since the start of the war, the invasion of Russia in Ukraine. Is this to be expected? Would you expect this to continue to go down, to stabilise? Where's this going to go?
That's difficult to answer because it massively depends upon what will going to happen in Ukraine, how the war is going to develop, and also how the general state of the world economy and of the German economy is going to develop. So on the one hand, German companies did have long-term interests in Russia. But on the other hand, the Russian economy is now also experiencing what looks like a prologue to a long-term stagnation. And this could massively reduce their interest to deal with Russia regardless of the political situation. So it's difficult to tell.
OK, I want to switch to energy now. So the EU agreed a gas price cap earlier this week. Will this significantly harm Russia in any way? What do you think?
I don't think so. I mean, we have to be realistic. Most measures which the EU introduces on the energy market are going to reduce Russia's capacity to export to the EU. They are already reducing it now. But actually what's relevant for Russia is the budget effects. And budget effects, given still persistent opportunity of Russia to export gas and oil to other countries outside the European Union, outside the United States, which are not part of the sanctions. So as long as Russia has this capacity, it still has budget revenue it needs. So okay. I don't expect the harm to Russia to be big enough to really change the war developments.
Well, of course, that fits into what's happened today with Russia's president opening a new gas field with the goal of supplying China. How significant is this specifically for Russia? To what extent can it possibly replace the European market for Russian energy?
I mean, I don't expect China to replace European markets for Russian energy. This is definitely not going to happen. And I also expect the prices Russia is going to receive for its gas in China to be lower, and also the technology needed to, for example, sustain the exports to China. It also depends on European deliveries. So things are not going to be easy for Russia. But on the other hand, the really relevant question for Putin's government now is not whether you're going to replace Europe, but whether you're going to get enough money to maintain the government apparatus, the war machine, and the control over the country. And this most likely is going to happen.
OK, so could be strategically important even if Europe isn't displaced there. Alexander Libman, thank you very much for that.
Thank you.